Holy shnikes, that was ugly. Stocks fell off a cliff this week with the Dow Jones Industrial Average down 3,600 points for the week. And more importantly, Tesla was down from the all-time high of $968 all the way down to $667. Now what? Do you buy Tesla now or do you wait? In this video, I'm going to tell you what's going on in the markets and what you should be doing, especially with your Tesla stocks. And guess what? We're going to get started right now. What is going on, and welcome back. In this video, I'm going to tell you why Tesla went down this week, what's going on with these markets, and what you should do about it. This channel is about helping you make and grow your money. So if you're interested in making and growing money, at least consider subscribing. And if you don't like making money, I guess subscribe so you can watch this idiot travel around the country for the next 8 weeks or so trying to avoid this crazy virus that's out there. There's been a ton of hype around Tesla for the past really month or so. Tesla 1,000 by the summer, Tesla 15,000, Tesla in every aspect of our lives. If you were one of those buying the hype, did you put your money where your mouth is? How do you feel about that trade now? Or maybe you waited and now you're ready to strike. Go ahead and comment down below and let us know what you did. I think there are 3 main reasons why we saw a huge decline this week. The first reason, there's a lot of emotional trading going on right now. The stock ticker is more a reflection of the current market feeling or emotion towards a particular company, not necessarily the fundamentals of that company itself. And macroeconomic factors can also weigh on how investors think about a company, a particular market, or a particular stock. There's always risk. Come on guys, there's no investment that doesn't have risk. But sometimes it's just completely overblown. Sometimes it's unexpected, like a pandemic we could be facing right now, or some other catastrophic event that happens. So you have fear being one of the main driving forces behind trading right now. Just look at the news headlines. You'd think it was the end of the world. And in general, I think it's difficult for most people to hold these 2 things in one hand. Optimism for the future and a sober view of the risk. So you really have to take the time and dig deep. But right now, a lot of investors are making decisions based on emotions. The second reason why I think Tesla and the overall market took a nosedive this week is the beer virus. Apparently, you can't actually say the name of the virus on YouTube. People have been getting demonetized over it. But I'm not monetized, so please subscribe and hit that like button and help me get there. But in all seriousness, I do want this to get out to you guys and not get taken down altogether, so we'll just call it the virus. We all know that the virus is expanding and it is getting worse. It is an outbreak, pandemic per se. And the probabilities of it getting worse increase every day. And probabilities are tough to assess because things are always changing and there's so much unknown. Probabilities are guesses. Kind of educated? Maybe? Nonetheless, the fear of the virus is out there and it's clearly driving people to sell off. But that can't be the only reason why Tesla and the overall market is getting hammered so badly right now. Oh, no. There is one more reason, and this one is way more concerning, and that's leveraged hedge funds. Leveraged hedge funds. I think I said that right the second time. I'm not sure. This one is getting the least amount of media attention and the least amount of hype, because we all know the media only reports on what gets clicks. This past week, Warren Buffett talked about how interest rates are so low and how it is encouraging borrowing and the use of leverage and investments by various people. He was speaking directly to this. Now, CNBC had a great interview about this week. I cannot pronounce the gentleman's name. I'm sorry. I went to public school. I have no idea how to pronounce it. I'll just put it up here on the screen for you guys. But he gave a great interview. He talked about the use of leverage with hedge funds and how this could cause a forced exiting of sorts if the stock market continues to decline further. Essentially, these hedge funds are having their leverage called due to the downturn in prices, causing a greater sell-off of stocks to cover their positions. More importantly, he said that these hedge funds are super leveraged, more than they were just before the Great Recession. He said he's never seen leverage like this before. That should be scary. I need a beer after hearing that information. By the way, I tricked you guys. Look, right there. Yeah, you can't drink and make YouTube videos. You can't do that. It's against the law or something. You can't do it. In all seriousness, guys, that leverage is the scary part to me. The virus is just a temporary factor in hurting the stock prices and driving these companies down. But that sort of leverage could signal that the market is not just overvalued, not just that the virus is going to hurt this quarter and maybe future quarters' earnings, but that the market itself is severely distorted by all this leverage. It could signal that the extended bull market that we've enjoyed was all a mirage. Think of all the leverage out there as a house of cards. At the base you have where the market should be, but leverage creates a stack of cards on top of a stack of cards on top of a stack of cards that distorts where the market actually is. So it is possible that the extended bull run in the stock market was fueled by the leverage used, not by solid fundamentals. So having said all that, should you wait? Should you buy? Should you hide your money under a mattress? Remember, this is for entertainment purposes only. I'm an idiot, don't listen to me. First, think on a 5 to 10 year timeline. Where do you think Tesla's going to be? Second, you're right. Stocks are on sale right now, and I think long term, Tesla is a bargain at its current price. However, I do think there's going to be more bloodletting in the coming weeks, so I'm actively watching Tesla, but I'm not buying it today. I think the negative, emotional selling will persist into next week at a minimum. We'll see how it all unfolds this week, but for right now, I'm holding pat right where I'm at. If you did already buy the stock, make the decision to sell based on where you think Tesla will be in 2 years, 5 years from now, not based on the current hype. Go ahead and comment down below and tell us what you would do. Or what are you doing? Are you buying? Are you selling? What's your strategy? I want to know. Comment down below and let's talk about our strategy coming into next week. That's it for the video, guys. Please subscribe, hit that little notifications bell, and if you're feeling real generous, hit that like button as well. It might help feed my kids one day. Thanks.